Okay, what's going on, everybody? I'm gonna do a very simple trade recap of the 515 calls that we caught. I think it was like a 350%, 400% return. Who knows? But trade breakdown was super simple, right? So this is my laptop setup. You don't need anything overcomplicated to catch a trade like this. The main thing we were looking for was we had this nice push up on SPY, right? Really nice run up. We had this consolidation area. What I was looking for was my bias all day was bullish. What made me ultra bullish for this play, especially during power hour, was the fact that we left yesterday's high intact at 515, I believe it was 45 level. That level was yesterday's high where we got rejected from. We were consolidating, right? We have this 15-minute gap which was being respected that we were just chopping in from, right? What I noticed was the fact that we were in the last hour of trading, right? 515 calls weren't too far out the money. You know, they were about, what is that, 80 cents out the money with 1 hour left till expiration. Well, really like an hour 15 minutes because on Thinkorswim you can trade till, 4:15. But the premiums had a whole bunch of range. Honestly, my entry came and my biggest level of conviction for this trade was this 5-minute fair value gap that I have marked out down here, the green box. The fact that we dove into it at 3:30, these calls are 80 cents out the money, right? With 45 minutes left till expiration, it seemed like a very good bet to me, considering the fact that during the later hours of the day, specifically power hour, and very specifically the last 10 minutes of the regular trading hours, which is 3:50 to 4 o'clock Eastern Time, the last 10 minutes, whether you believe the market is controlled by an algorithm or it's buyers and sellers, that's besides the point. I believe it to be the algorithm will run through that level of liquidity in the last 10 minutes, right? This is why I always wait for 350 plays. They're super volatile, but if you know what to look for and if you know where to target, being yesterday's high, also lining up with equal highs, which we finally broke through coincidentally at like 350. The fact that we were 80 cents out the money, we bought these calls at a very deep discount. You know what I mean? These calls opened up basically worthless this morning, traded all the way up to around $1. They dipped back down to the lowest they were was $12. Buying them damn near 95% off it looks like a buy to me. You make your money on the buy with options. You never make the money when you sell it. You make the money when you buy an asset. You make the money when you buy a contract for cheap and you flip it to somebody else that's just chasing and, trying to take a quick scalp. One other thing I want to note that's very important when you're taking plays like this is focus on this candle here and this candle here, right? A fair value gap is always a three candles, pattern or three candle sequence where you have this candle, large displacement, big body candle like we know, and another candle right here. So inside this displacement, the market is going to want to run into this displacement. And what I want you to know is when you're drawing a fair value gap, let me get rid of this right now. When you're drawing a fair value gap, you're going to go from the first candle's high, which in this instance is 14, all the way up to the third candle's low, which it looks like it's, 22? This candle's low, 22. I want you to see where this candle closed at. Focus on where this candle closed at. And you could see it up here. You'll see where it closes at, 14. This candle's high and this candle's close both coincidentally line up at 14, right? And that's exactly where we bounced from, and we had a run from 14 all the way up to damn near $1.05, which is insane. We were in these calls at 16 cents, so I apologize for the 4 cents of drawdown before I gave you guys 75 cents plus of upside. But trades like this are pretty easy to spot once you know what to look for, right? Equal highs, equal lows. They're the easiest trades in my opinion because you know where the market wants to trade into. The biggest obstacle is finding that good entry. Is focusing on the same premium. If you guys were paying attention today, I really was scalping these 515 calls all day long. I was watching them all day long. We had these equal highs at 71 on the premium, which I was just mentioning to you guys a whole bunch. 71, 71 here, a lot of area up here. What I think this is, and what I believe this to be correct with my trading psychology, is for every time you buy an option contract, obviously somebody is selling that to you, right? So the ideology and just the mindset, and I guess the psychology behind this too, is somebody is selling those calls, right? Whether it's at this time, which is, what is that, 1:45 in the afternoon, somebody's buying at 71 where we got rejected from, somebody is selling it to you at 71. So they're selling calls. Hopefully the premium will go to zero, because when you sell a call, you're trying to collect all the premium, because 90% of options really expire worthless if you're out the money. Actually, all of them expire worthless when you're out the money. So when we break over these highs, the people that sold those calls to you, they would have to buy them back. The same way that above old highs is, buy stops, and below old lows is sell stops. I believe that to be true with the contracts as well. So you can call this buy side liquidity, you can call this sell side liquidity, and you're taking out people's stop losses with the option contract, which I like to think of it that way, but I'm not going to just prove that to be true. But this is the mind frame and basically the whole strategy in which I like to trade. So I keep my charts very, very simple. As you can see, 15-minute gap. Yesterday's high lines up with today's high. 515.45, same thing. 515.48, relatively equal. They're 3 cents off. We're gonna break above this and take out those stop losses that are resting above here. So above these two highs, you have to assume there's an area of stop losses in which the market will try to trade into. Without getting too complicated, there's a simple ideology. There's a simple trade breakdown. And let's capitalize on more of these moves. It's simple. Just put in the repetition, watch your premiums, understand why the market is moving in, this direction or that direction, and let's catch more of these. So study from this, and I hope you guys can spot these on your own, and we'll catch a whole bunch of them together as well. So take care, everybody. Have a great night, and let's kill it tomorrow.